Okay, today's stock is going to be Meta, MTA, and we're going to investigate the score, the SmartScore, and we're going to give it a rating out of 10. And we're going to look at it if it's in the buying zone or selling zone or waiting zone by looking at our SmartScore. And then we're going to look at the red flags, green flags, red flags here. And then we're going to buy our should we buy, should we not. And then we're going to look at our technicals. And okay, let's get started. Okay, so it got so far 8 out of 10. Why did it get 8 out of 10? So let's investigate. Financial health is very good. Above 1 here, so that's good. That's good. Depth's a little bit, it's okay. It's actually really good. Profitability, 10 out of 10. Super profitable. Above 10%. Above 20 is even stronger. Above 10 strong. Above 20 is stronger, so still strong, super strong. Almost 20. Here's a red flag, CapEx. They're spending way too much on CapEx, which is they're investing their money on AI and stocks and AI and heavy investment in AI. And the cash flow is still positive so far. It's not like Google where it went negative, but it's almost negative. We'll investigate this later on our dashboard, see what's going on with the CapEx. Growth, solid growth, as you can see. EPS next year is a big jump. They're saying 34%. But overall, it's going to be 20% growth. So valuation, this is obviously according to analysts. The valuation below 1.5 is good. Below 1 is strong. So it's so far so good. P ratio is super low, 20. And we're gonna, because it's a mega cap, as you can see here, where's market position? It's a mega cap leader. So valuation, just for you guys to understand, for mega caps, the PE usually is 22. So 22 is anything below 22 is super low. So 22, 26 is low considered for a mega cap. So let's go back. And then the forward, I believe is Buffett zone below 20. That's what he likes it. He's probably investigating this too as we speak. Capital, high return, ROIC is above 10, so it's really good. Payout ratio, it's really good, it's really strong. And here, premium, as you can see, very strong. You can pause the video or you can speed it up as you like. If I'm talking too slow or talking too fast and you want, this is a mega cap as we discussed. Of course, strong buy. It's Meta at the end of the day, and the PE ratio, it's dirt cheap right now. Track record, amazing. Momentum, it's down obviously because of CapEx, so we're gonna investigate CapEx here. Overall on here, it's definitely a buy, 8 out of 10. Strong company, that's what it's saying right now. But is this buy now? We'll check that out when we get to should I buy or not. Now let's go to dashboard. 1 year performance, amazing, as you can see. Not amazing, sorry, it's going down. I would say, yeah, you're probably near the buying zone. CapEx, this is why the stock dropped. CapEx keeps going up, 19. It's slow, it's clearly going up. Cash flow will keep decreasing as long as CapEx keeps going up. It's okay, as long as, to be honest, it didn't go negative like Google, so you're okay. So next quarter, they should probably be, cash flow should be a little bit better. And let's move on. EPS growing, amazing. Just try to remember these numbers. Look, as it goes up, down, as you can see. It went down last year by 1%, not much, but here it went down 37%, but then bounced back up. So overall, 10 years, 22%, 5 years, you're looking at 15%, and 3 years, 22% up. So we're just gonna stick to this number. Just remember this number. We're gonna use it probably in our analyzer tool, earning valuation method, the 15%. We'll show you how it works later on. And then current P is 20. Like I said, anything 2026. Is this is, I would say, the high low side. This is the low side. Anything low and lower is pretty good. So it's pretty low. So let's go back. pretty low. And then as you can see here, low, super low. Average is 28, 25. You can say it's below those numbers too, which is really good for a buying zone. And this is the big issue. Missed by 16%, which is a huge no. That's why stock went out, all due to obviously here CapEx, which is a red flag. So this is the big issue. So let's look at the revenue growth. Revenue, as you can see, it's going up. As you can see, going up and down, but then it's going up. Free cash flow, but then it's going up, down, but then it's really going up. CapEx, this is bad. This is not a good thing. Way too high, above than what they can afford. That's why obviously the stock fell, but they have to spend on CapEx, to be honest, just because they need to buy this AI stuff, so the stock can go up in the future. If they don't spend now, when will they spend? That's what their theory is. This Zuckerberg guy. But at the end of the day, they need to control their spending. I mean, the budget's way too high. So let's move on. Here, as you can see, it's really well. ROC above 10%, which is really strong. Above 20 stronger. This is what you usually want to see. Shares outstanding, it's going down. You always want to see it down, which is a green flag, which is really good. So pretty much in here, they're giving you, if you have a pizza, they're not diluting it. They're giving you back more slices of the pizza instead of taking it away. If it's going up, they're taking it away. If it's going down, they're giving you more slices back of your pizza. It's a quick explanation because I'm trying to run this as fast as possible. Okay, here's the percentage of the CapEx. Very bad. This is good. And here, it's terrible. So hopefully in the future if it gets fixed. So let's go. Should you buy? P ratio is 20, really good. Below its average, like I said here. If we go back here, but as you can see, fair value, if you mark the high and the low, its average price according to the up and down, 52 week high visit 50 low week low is 549, which is way below that. Peg, this is not correct. It's 0.8. We just discussed this, so it's a green here. They're saying 680. I've seen even some analysts say 700, I believe, above $700, but this is more realistic than 700. And then company growth is obviously positive, so pretty much scored 5 out of 5 here. Bull case 36.8. I don't see it going this much this year, or this price this year, or this price this year. This maybe this. This, if capex goes up and the cash flow goes negative, you could see it at this even price, to be honest. If capex increases and cash flow, just like Google, goes negative, the cash flow goes negative, then, but most likely you will not. Very slow percentage. Most likely I see it honestly between 650 to 750 for the end of the year, around that range. And then we're gonna look at our earning valuation method, our analyzer tool. So we're gonna go on the low side, 22, as you can see, as mega caps, and then we're gonna use let's go back to estimators. Let's see what they say here. They say it's gonna be around 62 EPS. So let's run it on here. So they're probably saying around 22%. Let's just say, yeah, let's just say it stays at P ratio 20 and EPS grows at 22. And according to analysts, not to me, according to the estimates, what they're estimating, the analysts, that's what they're saying. So by 2030, they're saying the stock is gonna be 1,200. But as you can see, like I told you, remember that number, the 15% number? Most likely it should be 15%. Because last 5 years, it only grew by 15%. So you're looking at $962 if the PE ratio is 20 and it grows at the rate of 15%. So let's go even less. Let's go only 10%. If they do worse than that because they missed one of their quarters, let's just say hypothetically PE ratio is 20 and 10, it'll be $100. But most likely, being realistic, its PE ratio should be 25. Growth rate, I'll say 12. Yeah, you're probably looking at, it's gonna be above $1,000, I say, by 2030. So if you buy it today, which is a really, really good price, by 2030, you should have above $1,000. So about 90 to 100% return if buying it today and hold. And now, like I said, we're gonna compare it to other stocks. So let's move to the comparing tab. We're gonna compare it to Google and Snap because those are the social media platforms. YouTube you have, and then you have Snap. Obviously Snap, it won't even compete with Meta and Google. It's not even in the same competition, honestly. So Google wins. Below 20 is good. I mean, they're both low, honestly. They're both good. I don't see them as X. They're both good. Forward P, this is bad. Above 20 is not good. Below 20 is good, so this one would win. Below 1.5 both, so they're both okay, you know. 27 revenue growth, pretty much 7. It's not that big of a difference. Now margin, okay, this is a big difference. That's why I have higher now. Operation, pretty much the same. 46. This is what they're saying. The analysts are saying, yeah, this is what they said. 770. I don't see it going this price. It's probably gonna be 650 by the end of the year, if we're lucky. So let's go to our technicals page. So according to comparing stocks, if you're gonna buy a stock out of these three, definitely should buy Meta. Now let's go to technicals. Technicals, downtrend, bearish, leaning weekly. As you can see, it's doing terrible. So let's go to our, we'll go to our trade view, our statistics chart. As you can see, it didn't enter the buying zone, but this is weekly. This is weekly. As you can see, this is weekly right here. It shows it's still going down. This was the buying zone, March 30th, according this week. So as you can see, for weekly, it shows it's going down. The volume is down. So that's why, technically speaking, that's why it probably went down, because the volume was down, so it's going down. Now we're gonna look at our daily chart. According to our daily chart, volume is up again here, as you can see. 2 volume days. I don't know if you can really see it. 2 volume days here. The bottom shows it. Maybe I make it bigger. As you can see, 2 volume days, so it's going up. That's why everybody's considering buying it today. They're just not even waiting for the buy signal. They're all just buying it because it's just so low. Last time it was this low was probably March 30. Yeah, so that's why I see everybody buying it now. So they're not gonna miss the opportunity again. So that's why people are buying it. I would definitely, my personal opinion, I would definitely buy it. Start slowly buying it, loading up on it. It's easy actually buy. And as you can see on our analysis, on our deep dive also, is it a buy? It's up to you to do more research. I am not a financial advisor and will not be held responsible for any decisions you make. But for me personally, I'm definitely buying this stock. And have a great day.